Hi, this is Raman. Welcome to another episode of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In today's episode, we'll take a look at how to use Fibonacci's in order to take a trade. Fibonacci's are great because they help us identify the levels where we can place a trade. And again, we're looking for a reversal pattern at one of these levels. So let's go on to the charts and we'll take a look at how to use Fibonacci's in order to take more effective trades. Today we'll take a look at how to use Fibonacci to trade Forex. This is Euro-Yen daily chart. So when we use Fibonacci's, what we are looking for is price to pull back into Fibonacci retracement levels. And then we are looking for a continuation move in the direction of the previous move. So it's a continuation trade that we are looking for. So in this case, I drew my Fibonacci's from the top here to this move. So we do need to find a swing first. So we have a swing point at the high here and a swing point at the low. And now price is going back here, and we would draw our Fibonacci here, and then we are waiting. So we need to wait and see where price will stop. So here we see a pin bar here, and we see that price has come to a 50% retracement level. So that's a good one. So when we see that price either retrace to 50% or lower, chances are it's likely to continue again in the direction of the previous move. So in this case, we have a move to the downside, and now we would look for a continuation move to the downside. So either we can take our trade at the close of this candle here, or we can wait. So in this case, if we were to wait and see how price moves here, there's another good candlestick here. So we have a nice bearish pin bar here, and we see that price is not being able to go above this 50% retracement level, and we get a nice pin bar. So this is a good signal to enter into a trade. I would even be willing to take a trade on this pin bar here as well, because I am looking for price to drop. Now our stop does need to be on the other side. So I would use again a Fibonacci level and put the stop on the other side of it, because price can pull back. Sometimes it can pull back deeper than where we had expected. So we have to make sure that our stop is a little further away in order to give our trade some room to breathe. So once we enter the trade short here, now we stay with the trade and we see that the price keeps on dropping. We all have red candles here, and then we have a big red candle. So in this case, what I would do is, because it's a daily chart, now we're looking at a longer term trade. So we enter the trade short here and we have a big drop. And now it's a good idea, as the price is moving lower here, it's a good idea to basically trail our stop behind here. And again, we can use our targets or our Fibonacci levels as targets. So as the price moves lower, we can move our stop here first over here as the price drops here, and then as price moves lower, we can pull it back here on the top of this level where the move had started. And as we go lower, in this case, I would likely just keep it here, because price hasn't really done a whole lot. It hasn't given us a lower high, so I would just keep it there. And as we see, price is getting into our Fibonacci extensions. I like to have my Fibonacci extensions in the same place or in the same indicator as my Fibonacci retracements, just because it makes things so much easier to plot. So here we have plotted our retracement, and here are my extension levels, and we see that price has now broken through. So usually the first target is our baseline here, where the move has started from, so the bottom of this move here, and then we get into our extension. So here we see that price has gone into 123%, 138%, now 160%. So here, because there are no green candles here, we don't have to worry about price going higher. So I would just stick with the trade, and then we get into the 200%. So now price has basically done another move here to the downside, the same size as this one. So that is a good amount of profit, and we see that price was trying to go lower. But at this point, it's generally a good idea to take a profit, or if you don't take profit, we see a large pin on the downside here, and then you can either move your stop behind this, and at some point you would get stopped out with a profit, or you think to yourself 200% moved, so, or 100% from the initial starting point, actually more than 100% because we started just above the 23%. So that's a big drop here. So that's a good place to take a trade and not really try to squeeze every single pip that we can out of it, because that in itself is a 570 pip move. So it's a good idea to just take a profit here, or you can just move your stop on the other side of this here, and then the trade would take you out with a profit. So that's another option to trail your stop. But overall, this is a longer term trade, and you can use Fibonacci on a lower time frame charts as well. But I found this a really nice one for Fibonacci, so I thought I will share this because I have seen requests come in looking for the longer term moves as well. So just to recap here, if you're wanting to use Fibonacci to trade, first we need to find a swing high and a swing low. So we're basically looking for a move in a direction. So in this case, we have a move to the downside. You would draw your Fibonacci's, and then we are waiting for price to show us reversal signs. So in this case, price reverses at our 50% retracement level, and we have a nice pin bar here, so that's a good place for us to enter a short, and our stop would go on the other side of this. So I would like to give it some room for trade to breathe, because we are trading from the daily here. Our stops and take profit targets will be larger compared to 1 hour chart, for example. So here we enter the trade short, and we see as price drops, we don't really have much reversals. They're all red candles, so we can just stay with the trade here, and finally price goes through the different levels here, different extension levels for Fibonacci, and finally gets into the 200, tries to go below it but fails. So this is a good place for us to exit the trade, or you can just keep trailing your stop, and at some point it will take you out with a profit. So from entry to exit here, we have 570 pips in our trade. So our profit is $5,700 if trading 1 standard lot. Thank you for joining me today. I hope you enjoyed this episode. If you like this video, please feel free to share it with your friends, and like, comment, and subscribe below. That's it for today, and I'll be back with another episode next time.